What if I told you that for almost 100 years, there's been a clear-cut formula for building wealth? We've dug into 99 years of market history, all the way from the Great Depression to the AI revolution, and the data shows this incredibly strict hierarchy. It's something every single investor really needs to get their head around.
Okay, so let's really get into this because the sheer scope is just massive. I mean, think about it. We're looking at data that covers the roaring 20s, the crash of 29, the dot-com bubble popping, and it brings us right up to today's AI explosion. So yeah, this isn't just some random snapshot. This is the long game. It's about how money really works over time.
All right, so let's build this hierarchy out, starting right at the top. We're just going to look at the straight-up performance of the big asset classes over these 99 years and see, who's the king of the hill. So sitting right at the peak of the pyramid, it's small cap stocks. I mean, these have historically been the absolute engines of growth. Get this, they've averaged an incredible 13.3% every year. Now, yeah, they can be a bit of a roller coaster, and they've been kind of sluggish lately, but when you look at the long haul, they are the undisputed champ.
Okay, so moving down the ladder a bit, who's next? Right under the small caps, you got the big guys, large cap stocks. They're averaging a very respectable 12.2%. But here's where it gets really interesting, especially right now. These stocks have been on an absolute tear lately, thanks to that huge AI and tech boom. We're talking returns that have basically doubled their historical average. Pretty wild.
And here we go. This fills out the whole picture. Way down here, you've got what we call the stabilizers. Corporate bonds, they averaged 6.3%, and government bonds came in at 5.9%. Now, they're supposed to give you that nice steady income, right? But, and this is a big but, they come with a warning. Just look at 2024. Rising interest rates meant that government bonds, well, they actually lost money. So much for safe, huh? But now we get to the most important part of this whole thing. And honestly, it's the most dangerous. There's one asset we haven't even mentioned yet, and the hidden truth about this one asset, well, it's what separates the people who build real wealth from everyone else. So, I know what you're thinking. What about the safest thing of all? The stuff I keep in my savings account. What about cash? And look, on the surface, the numbers for cash and treasury bills seem fine. They earned 3.8% over all this time. It's a positive number, right? It feels safe, it feels secure. But that is not the whole story, not even close. See, to really get the trap here, you have to understand the huge difference between a nominal return and a real return. The nominal return, that's just the number you see on paper, on your statement. But the real return, that's what you can actually go out and buy with your money. It's what's left after those silent killers, inflation and taxes, have taken their piece. So let's just break this down real quick. You start with that 3.8% return on paper. Okay, now let's subtract the average inflation, which was 3.0%. That's just the cost of everything getting more expensive. Then, you still have to pay taxes on any of those gains. So, after all that, what are you actually left with? And here it is, the knockout punch. The real return on cash is negative. Let that sink in. By trying to play it safe, you are literally guaranteeing that you will lose money over time. Your cash is slowly but surely bleeding purchasing power. That is the cash trap. So the big question is, how do you escape this trap, right? How do you actually grow your wealth? Well, the data's pretty clear. It's not just about picking the right stocks. It's about having a real, solid strategy to beat inflation at its own game. A winning strategy has a few key parts. You've got to focus on reducing taxes, you have to preserve the wealth you've already built, and you need a plan for multi-generational growth. But, according to the experts, all of this, the whole shebang, really depends on one critical thing. And that one thing is the concept of a fiduciary. Now, this is a word you might have heard, but really understanding it can make all the difference in the world for your financial future. So what in the world is a fiduciary? It's simple, really. It's a person or a company that is legally and ethically required to put your interests first. Not their own interests, not their company's bottom line, yours, period. And let's be crystal clear about this. This is what separates them from a lot of standard brokers. A fiduciary is legally bound to act in your best interest. This isn't just a nice idea or a company motto. It's the law. It's a much, much higher standard of care. Now, full disclosure, the analysis we've been going through comes from a firm called Alpha Innovation Partners, and they are a firm that operates exactly on this fiduciary standard. Their whole approach is built around the ideas we've been talking about.
Specifically, this analysis is from Avi Crane. He's an investment advisor and a financial fiduciary with the firm, and his whole focus is on building these exact kinds of tailored strategies, especially for business owners and people who are getting close to retirement.
Look, the data from the last 99 years couldn't be clearer. Just letting your money sit in cash is a losing game. Inflation is basically a silent tax that's eating away at your future. So at the end of the day, the only real question is, are you ready to take control? And finally, just so we're all covered, here's the required legal disclaimer. Please remember that what happened in the past is never a guarantee of what will happen in the future.